I'm here for you guys, available for questions that you might have. Okay, moving on. Let's get to the material. Guys, last week's slides I'm not going to repeat tonight. So basically just a recap of last week. We dealt with the introduction. Let me just see if my screen is shared. I think I lost the share there. You guys should be able to see the new screen now. If you don't put up your hand, I'm assuming that you guys are seeing it. So if you're not seeing it, then you can bring my attention to it. So first up, last week we basically dealt with the introduction to this module. We looked at the preliminary audit engagements. What do you need to do before you start an audit? All the things that you need to consider. And where I want to start tonight is identifying what the next phase is. So you've now looked at the client has approached you, and the client has asked whether you will be available to audit his company. So you've looked at reputational issues, previous auditors, what experts you might need, what skills you might have, all those items that we've discussed, you've looked at to determine whether you are firstly a suitable auditor to complete the audit, because people will rely on your audit opinion. And then also, that's extremely important, do you really want to be associated with this client? So make sure that you read the ISAs that's relevant to that preliminary activities of an audit. Make sure that you understand them. It's very important that you know why they are there. So in layman's terms, to give you a practical approach, it's firstly, do you want to be associated with them? And secondly, are you really geared to take on that responsibility of giving external clients reasonable assurance of that company's performance? Because remember, that at the end of the day is the product of an audit. That's where we are building up to. Is all this planning and all this work is at the end of the day there to execute an audit and to get to a report. And that report will, there's different variations of the report and opinions that can be raised, but whatever the opinion is, that is external people will rely on it. The company's management will make decisions based on that. The banks, SARS, people that's going to lend this company money, creditors, suppliers, employers, employees, people will use that information to make decisions. So anything that can affect that decision making of external people is obviously important. So please make sure that you understand that very first part of determining whether you should take on an audit or not. The next important thing is, now that you've conducted that preliminary investigation, is that you want to move over to the engagement letter. So let's quickly go through the theory, and then we're going to do, like same as last week, we're going to do a question. I'm going to do the same question that we did last week, go through the same information, but only answer the rest of the questions. So what is the audit engagement letter? So it is mainly governed by ISA 210, and it basically says the auditor shall agree, not negotiate. So in other words, what that means, what I've summarized there, is that the audit engagement letter is a letter that you give to the company that you're going to audit, stating everything that you are going to agree upon. The auditor and the auditee, what you guys are going to agree on. But when we say that, we by no means mean it's a negotiation. It is still the right and duty of the auditor to decide what must be done. So this is not as a normal service level agreement where you get Telkom or Neotel to install fiber, whatever, at your business, and you guys sit around the table and you negotiate. An auditor is always independent. Although it might seem that there's always a level of negotiation, we are talking about practical things, not negotiations. We're not debating and things that can influence the auditor, you know. do it this way and I'll do things that way for you. Anything that, remember, the one thing that is most important to an auditor is to demonstrate his independence towards the auditee. In other words, that the auditee, the person that the auditor is auditing, should never be perceived to have affected the auditor's opinion, because that will immediately put a negative connotation between on the reliance that any person that's going to use that audit report, it's going to give a negative effect to that person that's going to use that audit report. And will you then rely on it? Portia, let's start with you. I said I'm going to make this interactive. Portia, are you there? Portia? Roxanne, can I jump to the other corner of my screen? Roxanne? Doesn't seem like everybody can hear me. Tumelo, can you hear me?
Yes, I can.
Tumelo, then you're the first taker. Thanks for answering. So my question to you, if you know that the auditor,
Yes,
you can't really, the auditor and the company that auditor is auditing, the relationship between them are questionable. Would you rely on that? Would you rely on that auditor's opinion?
no, I cannot.
So you see,
because it's not okay.
Yes. No, carry on. Sorry, I interrupted you.
Oh, I was saying because it's not independent. If he can't make a decision by himself, then we cannot trust what is written is true or approved or evaluated. I'm not sure which word to use, but yeah.
No, you're right. The main thing there is I use the word questionable, meaning any action between you and the client that can create a situation where someone else that's supposed to rely on your opinion can perceive your independence as being jeopardized, then that act is also not allowed. So even if it's just perceived to have influenced your independence, you didn't do anything wrong. Your independence is in fact not jeopardized, but the act created that question mark. An auditor should stay away from any act that can do that. So if you read your questions, make sure that if they give information, they might ask you, why shouldn't the auditor do this? And then you can say, but it might not be material, like the auditor can accept that from the client, but the auditor should always be vigilant to not create a situation where his independence can be perceived as being jeopardized. Okay. Agreed terms must be recorded in an audit engagement letter. So we've agreed with the client what we will be doing, how we will do it, and who will do it. And that information must be drafted in a very well documented engagement letter. It must be a written agreement. So, and very important, although there's lots of drafts out there, there is by no means a one document fits all template. We have, and we're going to discuss it now, the minimum requirements and some additional requirements that must be in that letter, or the letter must be, should not be vague about, but it's not one document fits all. Okay, it's not a standard contract. What's the minimum requirements? Objective. What's the objective of the audit? The objective of the audit is at the end of the day to express an opinion on the financial statements. That is the reason why we are becoming auditors, is to be in a position to give reasonable assurance. And I'm saying reasonable assurance because we hardly ever give absolute assurance. If you ever give absolute assurance, it means that you've tested each and every invoice, receipt, every document that went into the financial statements, you've tested all of it. That's absolute assurance. We don't do that. We use samples that we pulled from populations, and by evaluating the internal controls, we can get to a position where we can say we are reasonably sure that what this client has placed or documented in his financial statements is a reasonable reflection of his financial position, of his financial state. So we give reasonable assurance. That's the objective. But why is it a minimum requirement if that's not what we always do? Because we are not always engaging our clients in normal audits. Sometimes there is a limited scope audit, and the reason why we have a limited scope audit is that for that small section of the business, we want to do an absolute assurance, or we want to do consultation work. So meaning the objective of the audit must still be clear. So between us and the auditee or the client, there should be no confusion as to why we are doing the audit. Secondly, we're looking at the scope of the audit, and we will further go into the scope of the audit. So the scope is literally telling us what's going to be included in our audit bubble. In other words, if we give reasonable assurance, it means we gave that reasonable assurance over everything that's included in our scope. So the scope tells us what we'll be auditing. Objective, why we are auditing. The scope, what we will be auditing. And then it will tell us what's the responsibilities of the auditor. Now, the next 2 points, I'm going to bring them up together, is very important. If you do a normal audit, and that's why I'm connecting this with the objective as well, you must remember that sometimes you get fraud auditors as well. So there's the objective of the audit is to find something that's wrong. We are already suspecting fraud. Tembakazi, if I can open the floor to you. Tembakazi, can you maybe unmute your mic? Hi, Tembakazi. How are you?
I'm well, thanks. Yourself?
Can't complain. If I tell you that we're, and just your honest opinion, if I tell you that we're going to do an audit, a normal audit, are you doing that audit with the expectation of finding something that's wrong?
Yes.
Sorry, just say again?
Yes.
Now see, that is the objective of a fraud auditor, an auditor that's inspecting fraud. A normal auditor doesn't go into a business, and I'm glad you gave that answer, but a normal auditor will never go into a business expecting to find something wrong, because we don't have any reason to believe our client, these records is fraudulent. Because why am I saying that? If I took you back to last week's class, we said as an auditor, we will do a preliminary investigation of the client. Do you remember that?
Yes.
So I'm going to ask this question to you now. If in that preliminary investigation, you would have already expected the client's records to have fraudulent activities in it, would you have agreed to audit that client?
No.
Okay, so that is why a normal audit, our objective is never to go in and do an audit with the expectation of finding something that's wrong. The objective is to give reasonable assurance. And if we can't give reasonable assurance, then we will say why we can't. So the main objective in a normal audit is to give reasonable assurance and not to find something that's wrong. So the responsibility, when we get back to these 2 points, now that I've elaborated on that, the responsibilities of the auditor is exactly that, is to audit financial statements. So those 2 paragraphs will tell the client, or make it clear between you and the client, what the responsibilities of the auditor will be and what the responsibilities of management will be. Now, what is very important here is that management must still be made aware, even in this agreement, that they remain solely responsible for the drafting and maintaining of internal controls and the financial statements. That's management's responsibility, not the auditors. So management are just reminded that in our engagement, by no means are we saying we are now responsible for making sure that your internal controls are working, or making sure that it's in place, or making sure that the financial system is in place. That is not our job. That's the express responsibility of management. You guys must interrupt me if you want to let me to elaborate on any point here, hey? Then lastly, obviously, the final product. Siamkela? Richard? Just unmute your mic.
Oh, can you hear me?
Yes, is it Siamkela or Richard?
Siamkela, Richard, the same thing, sir.
Okay, Siamkela. Yes.
Just a quick question, sir. You've talked about the forensic auditors. I just want to make sure that the normal auditor, they give reasonable assurance. Does the forensic give absolute assurance with regards to any activity that they will be investigating? Thank you, sir.
No. It's a very good question. Thanks, Siamkela. No, they also have various types of opinions that they do give based on the results that they've given. What makes a forensic auditor different than a normal auditor is that a forensic auditor almost goes in with a mandate. Now, if I can give you an example of something that I was involved in, when I was still an article clerk, we were involved. Our audit company was contracted in to investigate steel. You know, that a lot of these what do you call it, where they take all the used steel and scrapyards. So what a lot of them were doing is they were buying scrap metal from syndicates. So if you think about all these copper thieves, they must have a market of someone that's gonna take or buy that copper, melt it, and do something with it. You guys are happy with that? Siamkela, I'm gonna speak to you now directly. So they needed to have an offset place where they could get rid of this stolen copper. So what happened was my audit company, not mine, but where I worked for, contracted us with the mandate of investigating. So we didn't give, and our scope was limited to only the value of inventory. In other words, we had to trace if this company had so much raw material in the form of, say, copper, where did they purchase it from? So we had to compare purchase invoices with the amount on hand, with sales invoices, to see if there's not a discrepancy. But if you've only bought, I'm going to use a stupid metric here, if you've only bought 10 kilos of copper, how is it possible that you could have sold 100 kilos? So that's a forensic audit. It's more a complete different approach, and it gives a different opinion then at the end of the day, where we can sometimes give more of a negative assurance. So what's a negative assurance? A negative assurance is where I say nothing came to our attention. That's a negative assurance, meaning we did look at all the information, we did look at all the evidence, but just based on what was given to us and based on what we saw, nothing came to our attention that there's fraudulent activity. So we're not saying there isn't fraudulent activity, nothing came to our attention based on what we evaluated. That in itself is also an audit opinion. So if I use that example, we also would have had an objective. The objective would have been to investigate, not to audit really. To investigate a specific section of the business. The scope the scope would have been highly limited. It would have been limited only to inventory, and that scope paragraph would have explained it. And so we go on until the expected form and content of the report, where this client would have said, at the end of the day, I would like to get a report where you can tell me that the value of my inventory is free of material misstatements. And then we can either give reasonable assurance or we can give negative assurance where we say nothing came to our attention. Siamkela, did I answer your question? Siamkela?
You've answered me, sir. Thank you.
Thanks a lot. 100%. You guys can just call me Charles, hey?
Okay.
Thanks. Thanks, Siamkela. Any other questions on this before I move on?
Hi.
100%. Yes. Who am I? Who? Tembakazi.
Yes, it's Tembakazi.
Yes.
I would like to know what would constitute fraud in a company if let's say my client that I audited in their previous audit, they were given a qualified opinion. Would that be a cause for concern?
Definitely. So, okay, so you get an audit opinion, but we will still get to audit opinions in much detail, but it's a very good question because we are talking about the expected form and the content of the report. So the opinion that you want to receive is an unqualified opinion. Now, I know that at the moment that you say that, it sounds wrong. It almost sounds like, but that doesn't, the opinion doesn't have any qualification. So an unqualified opinion means we didn't qualify our audit report. So what does that mean? A normal audit opinion will sound like, based on the audit work conducted, we can provide reasonable assurance that the financial statements of a company are free of material misstatements and omissions and blah, blah, blah. There's a whole paragraph. But the moment that I qualify it, it reads the same sentence, but it will say, except for inventory, except for buildings that were undervalued, except for inventory that were overvalued, except for blah, blah. You get that is a qualified audit opinion. It means that you can rely on everything. Our opinion is applicable to everything except for a specific area of the business. And that is definitely not a good audit opinion to have. The worst audit opinion, however, is where we as auditors decide not to give an opinion. It means that stuff is so wrong in that company, but because we are bound by confidentiality and we can't really speak, we don't say anything. So if you are the bank and you want to give a company loan and that their auditors abstain from giving an opinion, you should probably not give them a loan either. Temakazi, did I answer your question?
Yes, thank you.
So just to focus on your question again, an unqualified audit opinion is what we want. That is the best audit opinion. A qualified audit opinion means that everything is fine except for. There's an except for clause in that opinion. Okay, so that's a qualified opinion, and then it gets worse from there.
Okay.
But we'll get to all the various audit opinions a bit later, but when we do the reporting phase. But now you guys know what to look out for, and that is exactly that last point in the engagement letter is what does the client expect to receive at the end of the audit? Okay, and we can give them expected form of the report and what it will contain. Any further questions on this? Okay. So obviously there are always some additional matters that we need to consider. Those are the minimum requirements. But obviously this is a discussion with the client, and there might be factors that are unique to this client that will affect how this audit plays out. how this audit will run. Okay. So firstly, the auditor will have an expectation of written confirmation of oral representation. Everything must be written, documented. Audit arrangements. Audit information management becomes aware of during the audit. That is extremely important because remember, we audit a client over, some clients are quite big, so we can audit them over a span of 3 months or 2 months. So in that period, obviously something can happen that will affect our approach. A good example would be when we started the audit, the client was a going concern, meaning it would have still, its financial position was in good standing, and to all reasonable expectations, that company would still have carried on as a profitable organization, profitable business, past the next 12 months. Now, say one of their biggest inventory stores burns down, and they are not covered with sufficient insurance. And it now affects their ability to carry on as a profitable business. We must know about that immediately. Or say, for instance, the client, our client is suddenly being sued by a third party, which will probably have significant financial consequences if they lose the case. We as the auditors need to be made aware of that. So we highlighted in the engagement letter that management is responsible to make the audit team aware of anything that will affect the view of what we had of the client before the engagement versus now after the engagement with this new information. And then obviously the possible involvement of other parties. If I say possible involvement of other parties, we're looking at the previous auditor, internal auditors, external auditors, other external auditors. But we'll elaborate on that as well. Guys, please ask questions. These are discussion points. If we look at the second point, audit arrangements, there we want to tell the client what's the name of the actual auditor, because remember, some audit companies are quite big. So that audit company will assign a specific audit partner or audit director to that account. And that person's name, they must know who's in charge of this audit. What does the team comprise of? How many first years, second years, third years, seniors are on this team? When do we want to meet with key personnel? When do we want to meet with the IT manager, the senior IT manager, and all of that? So because those key personnel are not always on site. So the client must know in advance we would want to speak to these people, and they must tell us their availability. This isn't just an example. For instance, inventory counts. Most trial balances, and that is what we as auditors basically audit, is a trial balance, because the trial balance is the list of all the accounts that finally makes it to the financial statements. So we audit the trial balance. So on that trial balance, if it's a manufacturing company, there will always be inventory, meaning we'll have to conduct inventory counts. And inventory counts can be very time consuming because of their geographical location and how they need to be counted. Do we need experts that need to go and that has to go and evaluate these sites? Very important. And then obviously the audit deadlines. We must discuss this with the client, because the client might have an expectation of when they want the report, and we must agree that that deadline is reasonable. So possible involvements of other parties, for example, previous or other auditors. experts, internal auditors. Something to note here that's also very important if I say other auditors. In some cases, you might be part of an audit team that audits a group of companies. You guys might have, some of you might have already done consolidations in accounting, and you know that there's in a group of companies, then there's a holding company and then various subsidiaries. You might be the audit team for the subsidiary, meaning you have to discuss the audit with the group auditors and their expectations, and also the work that they might have done. Because remember, in a group, there's always related party transactions, and that might influence the work that you have to do. If they've already audited it, you don't have to. If you are going to audit it, they don't have to. So there must be this communication, and these expectations will be drafted in the engagement letter. So, okay, the letter should conclude with a request to the client to sign and return an attached copy of the engagement letter as an acknowledgement of an agreement with the arrangements for the audit and the respective responsibilities of the auditor and management. You do not start an audit without the signed engagement letter on file. That is extremely important. Any questions up until this point? Okay, let's quickly go through the planning of the audit. Okay. Firstly, so the planning of the audit, don't confuse that with the preliminary investigation. So the preliminary investigation happens, and we decide whether we want the client or not, or whether we want to be associated or not, or whether we can do the audit or not. You know, you guys are familiar with the preliminary investigations. Please make sure that you understand them. It's a good question in the exam. Now you've done that, we've agreed the investigation, and now we want to plan the audit. Because what is the main idea of doing proper planning of the audit? Let's pause at planning. Roxanne, can you hear me? Tumelo?
Yes, I can.
Tumelo, let me pick on you. If I pause at planning, what did we just say is the final product of an audit?
To give a assurance.
100%.
Yeah.
100%, and we give that in the form of a report.
Yeah.
But before we can do that, we have to do execution, correct? We have to actually do stuff. We have to investigate. So if we do proper planning, our planning will tell us how many items of what we need to test and how we should test them. You guys might be familiar with the two steps of execution, which is the test of controls and substantive tests. So proper planning will give us a good idea of how to plan for the business, because we will identify the preliminary risks in each of the various main accounts of the business. Okay, so I'm just talking here very discussion-wise. So you guys must stop me if you want to ask a question. So I don't want to go theory by theory. I want to discuss the various points. Understand the business mean you. Okay, so let's face it. Some of you are definitely going to be auditing clients that you are not familiar. You are familiar with auditing, but if you go, for instance, to I'm going to use also an example that I was exposed to as well. If you go to a fertilizer company, a company that makes fertilizer, do you know anything about fertilizer? Portia?
No.
No, neither do I. But we know auditing, and we know auditing says before you can start executing, you must get an understanding of the business. That's why we need to realize that the raw material, how do we make fertilizer? So we need to understand that process to identify the various important aspects of that big inventory count, because the inventory count, since they are selling fertilizer, is obviously one of the material accounts on their trial balance. And we need to plan how we're going to audit it. But before we do that, we need to understand how do they make fertilizer. So if I can give you this practical example, this specific fertilizer company has got, I don't know what's the, for lack of a better word, they've got a plant, or it's more like a farm, where there's, you know, these cement farm dams, those round dams that you get on a farm. They store all the raw fertilizer, raw material in those dams. Okay, so now they send you as an auditor, you're an auditor clerk, they send you to this farm to go count the fertilizer. I mean, how are you going to count that? You don't know how to count that. I wouldn't have known if I didn't know the story. And that is where understanding the business comes in, and identifying what the risk might be. We need to know how to go do a stock count at a fertilizer plant, if that's our client. We need to know how to go and count inventory if we are assigned to a dairy farm. We need to understand how to count inventory, for instance, if we are assigned to what are these silos. We need to understand how they measure it, and then we must determine, would we be able to measure it, or do we need an expert? That we already discussed now as well. We might need an expert, a surveyor or a valuator, to give us an opinion on which we will take into account to determine the reasonableness of the client's valuation of their own inventory or their own stock. So this specific article clerk went to the dam, went to this farm without having properly done this part of the audit. And all he did is he measured the dam outside. Okay, I'm going to put my camera on so that you guys can see my hand movements. So I'm just going to unshare my screen quickly. The light is not extremely good on my side, so I hope you guys can see me properly. So what this clerk did is, so all these dams are on this farm. So he went and he measured the outside of the dam, and he measured how high it is, and then the radius. Okay, and then he did a normal mathematical calculation of what the content should be, the weight, the content, which was great. A few months later, that same fertilizer company defaulted on their payments and they went bankrupt. When other auditors or investigating auditors, CM Keller, as you asked earlier, the forensic auditors were then sent in to see why did this supposedly profitable fertilizer company, why did they suddenly go bankrupt and so many creditors lost out on their payments and money and stuff. They looked at all these dams, and they used a dipstick. It's a measuring tool that's got measurements on it, and you dip it into the dam. And there they realized that the dam that was supposedly, say for instance, this high, weren't full of fertilizer, but it was full of cement up until there. Only the top part had fertilizer in. And that's how they committed fraud, by defrauding it. And that auditing company actually had to pay the fine. So I'm just going to share my screen again. So that is why understanding the business is crucial. We need to know what we have to do to be able to be in a position to provide that end result that we want, that reasonable assurance. So we identify and assess the risk. Then responsibility relating to fraud. You guys must remember that we as auditors are being bound by confidentiality agreements. We are not allowed to share with the public any information. And that is why I said earlier when I explained that negative or that the worst audit opinion that you can give is by withholding your auditing opinion, is actually saying, guys, there's a problem with this company without having to say it. You're not breaking any confidentiality clauses. You are just withholding your opinion, meaning that everybody should be aware. So if we say responsibility relating to fraud, the auditor is absolutely responsible for reporting fraud if he happens to find it. Okay, I'm going to say that again. If he happens to come across fraud, he must report it immediately to the reporting to the SICA reporting authorities. So not clients or externally or anything, to the SICA board, the financial board. He needs to report it to, and that's all. Other than that, he doesn't spread the news at all. But if we speak about responsibility, we say he doesn't. We as auditors, we don't have. It's not our responsibility to detect fraud. So Siamkela, I'm getting back to your point there. It's not our responsibility to find fraud. We must just execute our audit procedures to the best of our knowledge and our ability on the sample that we're going to test eventually. And if we come across fraud, it is happenstance. It is we found it. If we didn't go looking, we didn't go look for it. Okay, so that is to clear up the whole responsibility to relating to fraud. We need to understand that. Is everybody clear on that? Okay. Laws and regulations. Siamkela. Siamkela, you've got the floor if you unmute your mic.
Mr. Charles, I've got a little bit confusion.
Let's see how we can clear that confusion.
With regards to the roles and the responsibilities of the internal auditors. I mean, like on the news, we've read about many businesses, the VPS Bank,
yes,
scandals, yeah, all over.
Sign off.
I mean, in terms of their definition, like it's their independent, objective assurance and consulting activity that is designed to add value and improve the organization's operations. But you know, these frauds happen under their watch. So what controls do they put in place? But at the same time, such things do happen under their watch, and then we are expected to bring external auditors, the forensic, to come and investigate the fraud.
Okay.
So what? Where do their limitation ends in terms of fraud?
Very good question. I'm just going to correct one thing that you said there. Just make a clear definition. You spoke about internal auditors at the beginning, eh?
Yes, that's correct.
Okay, so there's an extreme difference between internal auditors and external auditors. Their mandates could differ completely. So internal auditors work for the company, meaning if we speak about big company groups like Edcon, Steinhoff, and those places, they have internal audit departments with a specific mandate. Okay. So which most of those internal auditors' mandate is not to audit the financial statements. They audit controls, they audit lots of other things, not the financial statements per se. The external auditor's main mandate is to audit the financial information. Okay, so, but to get to your question, so now that we've cleared that up, so internal auditors work for the company, so they are not, although they are also independent, they're supposed to be independent within the company, they work for the company. External auditors do not work for the company. They are contracted in to perform an independent review on the financial statements. So if I look at internal auditors and external auditors, I think the best way to explain it is that the customers, in other words, the people that will rely on an internal audit report is management and the audit committee.
Yes,
Whereas the people that will rely on an external audit report is shareholders, suppliers, creditors, banks, SARS, external people outside the company. So that is why the report of an external auditor carries so much more weight than that of an internal auditor. Not belittling the task of an internal auditor, I am an internal auditor myself, but I came from the external auditor background. So they have completely different mandates on that. But to answer your question, where does the controls lie? So, say for instance, me and you are part of the same external auditor group, CNS. We are CNS chartered accountants, and we have committed to audit this client. In our planning, we must make sure that we understand what is our responsibility relating to fraud. The first thing that me and you will have to realize is that it is not our task. It's not our obligation to find fraud, because what does it mean to find fraud? It's the same as finding a diamond, meaning you're going to keep on digging and digging and digging and digging and digging until you find a diamond. That is what a forensic auditor will do. A forensic auditor will look at an audit scope or an area of audit completely differently to that of a normal external auditor. A normal external auditor will come to the diamond mine and he will make sure that he understands how we are supposed to be mining for diamonds, and are we in general digging to the right depth, and we will make sure that everywhere that we dig, we did go at least that deep. And if we did, then we are happy. So that is the difference between a forensic auditor and a normal auditor. Sticking to a normal auditor. If it so happens, let's take VBS Bank. When the auditors of VBS Bank audited their financial statements, and in their testing, they found irregularities. They are what's that word? Compelled by legislation to report it immediately, not to the public, but into the CICA framework, to the financial board. So you're still following me?
Yes, I'm following you.
Okay. That is the main thing that you need to realize there, is that we're not auditing to find fraud, but if it so happens that we find irregularities, we have to communicate it. We immediately have to tell the people that are going to rely on our boards. We need to tell them, listen, there is a problem, we are busy sorting it out. Then we give management an X amount of days to sort out that problem. And if they then can't prove that that isn't an irregularity, then it will be reported and the authorities will come in. So there's a lot of responsibility on an auditor, because people in general think that auditors are there to find fraud, but that is not the case. And that is why a lot of people, the moment that a company goes down, who are the first people to blame? The auditors, and by right. They are the first to being sued in practice, And after that, they have to prove in court that what they did in the execution of their mandate, that they did it according to the rules prescribed by the ISAs. They must prove that they did it according to the rule book. And obviously, if they can prove that, then they are absolved of any negligence that resulted in this company going bankrupt. So, Siamkela, did I answer your question there?
Yes, you've answered my questions. But what I don't understand is why should we always put a blame on external auditors, but whereas we do have also internal auditors, you know, who always ensure that the controls are in place, but there are people within the organization, in the organization who bypasses those controls. And then if an external auditor, let's say for a forensic auditor, maybe something happened in that organization, then they will call a forensic auditor, then they will find out this thing happened, but the internal auditors couldn't detect whether those controls were not functioning as intended. But then we're not going to focus on internal auditors. Then, some sort of, let us look at the forensic report or external auditors report. We are not paying much attention on internal auditors report and their findings. Or my second question is, should we as external auditors rely on internal auditors work or information with regards to fraud or auditing of AFS? Thank you, sir.
Good questions. So your first question that you had, and if I got it right, is why are we blaming external auditors first if a company goes bankrupt or there's defaults within that company? So the general assumption, which is not wrong, and that is how it happens, is that in most cases that the moment that a company goes bankrupt on which the auditors gave reasonable assurance, in other words, as I explained earlier, an unqualified audit opinion, in other words, a good audit opinion, is that the court and the lawyers of all the creditors and external people will challenge the work that auditing firm has done. In other words, the only thing that auditing firm has to do is to prove that in the way they selected their sample, in the way that they did this planning, in the way that they did their preliminary investigation, that they did it according to the rules prescribed by the international standards on auditing. So the moment that they've proved that in court, then the prosecution moves on to the directors of the company. But first and foremost, the auditors will always be first to be. Suing is a very strong word. It's almost like, and I'm going to use a very harsh example now, but it's the same thing if there's an accident and there's a fatality in the accident. The other person will always be, or a case of manslaughter will be opened. It doesn't mean that person is guilty of it, but the police will investigate it. So the same with a company that goes bankrupt. The authorities first investigates the work that the external auditors did before they move on. Getting back to my explanation on internal auditors in most cases are not financial auditors. They do not audit the financial statements, but yes, their work can be scrutinized to ensure that they are complying with the way they should have done their work. Thirdly to that, the internal audit institution in South Africa aren't regulated, whereas chartered accountants and external auditors are regulated by the Companies Act and IRBA. So that is why there's authorities in place over external auditors that against which their conduct should be measured. So you're happy with that first answer?
I'm very happy, sir. Thank you.
The second question that you had, should we rely on internal auditors? If I take you back a few slides. Yeah, right at the bottom is internal auditors. And I want you to go read ISA 610. ISA 610 says that the external auditor can decide whether he wants to rely on the work that internal auditors has done. Because remember, an internal auditor is working for the client. In other words, there's already a perceived, not a factual, a perceived influence in the independence. So since the risk of being sued is so big, Siamkela, generally speaking, would you rely on the work of an internal auditor? Now knowing that they aren't regulated and there might be a perceived influence on the independence, would you as an external auditor rely on their work?
I will not rely, sir. Now that I know they are not regulated, there's no way that I can rely on.
I'm happy with your answer, but that answer that you gave should never be cut in stone, because some internal audit departments are brilliant internal audit departments, and you as the external auditor are is allowed by ISA 610 to determine whether you want to put reliance on the work of internal auditors. So the ISAs that governs external auditors do allow you to place reliance on internal auditors. So that answers that, I think, your second question. Okay, then guys, I think time is running out. Let me just, Adele. Guys, can I carry on, or is there someone that needs to leave? If there's someone that needs to leave, just raise your hand. This class was only scheduled for an hour.
Yes, Charles, I'm here.
Sorry, Adele. Can I know the hour is up. Can I continue? I think only one participant has left.
Yes, absolutely.
100%. But if you guys need to leave, you must tell me, and then we'll stop. The class was only scheduled for an hour, but I think it's been a very interactive class. Got some very good questions, and I think that's more beneficial than anything else.
Charles, have I lost you? Can the rest of you hear me?
Yes, ma'am, we can hear you.
Okay, have you
I can hear you.
Okay.
Sorry, guys, I think I was on mute there. Apologies for that. Carrying on to the next section, laws and regulations. You need to understand why it is important to know what law and regulation is governing your client. If you audit, for instance, a bank, the bank is being regulated by the Banks Act, by the FSB, just to name two. You need to know that when you audit a bank, there will always be two auditors, just for your general knowledge. A bank in South Africa is required to be audited by two external auditors. That's how important the bank industry is in South Africa. It requires that a banking institution be audited by two external auditors. So you need to know what the laws and regulations are, especially, for instance, say, for instance, you audit an insurance company. You need to know that there's the Insurance Act, Short-Term Insurance Act, Long-Term Insurance Act, FSB. You need to know what the regulations state, because you also the company needs to adhere to them. Materiality, very important point, and probably one of the most important points. You need to understand what is material to the company, because 1,000 Rand might be material to company A, but extremely immaterial to company B. So in your auditing, you might find discrepancies. But if you go to a company that's got a turnover of 160 million Rand and you tell their CFO that their balance sheet is out with 20,000 Rand, they're going to fire you. Because 20,000 Rand on 160 million Rand turnover, you can do the maths of what the error percentage is. So that is materiality. We need to, in the planning phase, determine what is material and why we say that that value is material. We need to identify what accounts are material. And when we get to materiality, it gets even more interesting, because materiality, something can be material because of the number of errors, the value, or because of its nature. If the company contravened an act or one of those regulations, that mistake is material alone in nature because of the penalties that can be imposed. So you guys are happy with what I said there about materiality? Don't stress. We're going to pause a lot on materiality. I just want you to create that general awareness of what is materiality. We need to know what is wrong. What can we say is wrong and what can we say is right before we start testing? Does that make sense to you guys so far?
Yes.
Thanks, guys. Audit strategy. All of this will affect my audit strategy, my approach to this audit. Eventually, I will be able to draw up the audit plan. This audit plan is a blueprint of what I need to do to, at the end of the day, get to that position where I can have reasonable assurance. I will determine the audit documentation that I need. What would I need to be able to be in a position to provide assurance? What do I need to evaluate? And then obviously we need to communicate to management any deficiencies that we note in their internal control system, as well as management need to communicate to us before we start testing. What do they already expect is wrong in their system? So if they knew that there was a problem with the controls at that fertilizer plant that I spoke of, they should have told you it in the beginning. Then you knew that the reliance that you would have placed on their measuring of the fertilizer raw material would not have been taken into account. You would have used an expert or other methods to investigate and determine the reasonable value of that raw material. Any questions, guys? I'm quickly going to run over the scope. The scope of the audit is we will determine what financial reporting standards is applicable. So we now know what business you have. And as you guys know, the various financial reporting standards contained within IFRS deals with specific items in your business. Inventory, ISA 2. Property, plant and equipment, ISA 16. Leases used to be ISA 17. Who can tell me what the new lease standard is? Homework. Please go see what the new IFRS standard is on leases. Having said that, that is we will determine by looking at the trial balance, which is a list of all my accounts, what financial reporting standards will be applicable. And obviously I need to take that into account when I determine what do I have to test. I need to determine my audit coverage. What am I going to include into my audit bubble, as I said earlier. What is the geographical location of this company? Where's all the inventory sites? Where do they keep all their inventory? Where are their biggest shops? Is this company's head office in Cape Town, or is it in Joburg, or is some of it in Cape Town and some of it in Joburg? Because that will affect the scope of the audit as well. This I mentioned earlier. Are there other auditors? Does this group of company maybe have Ernst & Young as the group auditor, the main companies, so the holding company's auditor, and PricewaterhouseCoopers as the company of the auditor of the subsidiary? We need to determine what other auditors are involved so that we can determine what work are they doing and what can we rely on. If they are already testing all assets of the group, should we test assets? Should it be part of our scope? No, because we can rely. They are also external auditors. The reliance are better than internal audit. Would we require specialized knowledge? Would we make use of specialized third parties? Availability in internal audit and reliance thereon. We spoke about that already. The effect of IT. How IT intensive is this company? Because you guys remember from previous auditing modules that the moment that I have a very IT intensive company, I must employ the use of computer assisted audit techniques, CATs. So that also determines my scope. And then consolidations. Is this a group? Because a consolidation is obviously a much more trickier audit to do, and it will affect the scope. Is it included? Am I the question that I want to ask, or that you need to ask yourself when you review the scope? Am I auditing the group, or am I only auditing singular companies within the group? Guys, I think I'm going to stop with the scope there and open the floor for questions. I'm going to stay on for the next 8 minutes. If you have any questions, please ask and let's discuss. You guys have really been an awesome group. The discussions has been really good. Before I mute, please make sure that you've gone to the comment section, the chat section, and you've included your student number there. And please click on the link to the attendance register and complete. And also please complete the evaluation form. If you haven't done that yet, maybe use this time to quickly do that, and then I'll stay on mute to ask questions. Last point. If you guys are struggling with any other modules for which you require facilitators, such as MAC, FAC, all those modules, please comment the code or the module name in the chat section as well. And I'm going to put my email address on the screen momentarily. But remember, from next week on, we're going to use the query forms. So the email is, and also that email is not for any technical issues. So if you've got problems with your connection, your Teams, your getting your results or anything like that, I won't be able to assist you with that. So please use your normal communication to UNISA to address that. This is only for this module that you can use that email address. I'm muting now. If you've got any questions, please you can just speak. I'll hear you immediately. Siamkela, you can just speak. I will listen. Now the floor is open. You guys can unmute your mics if you want.
Just a quick question, Mr. Charles. When the auditors go to audit, let's say, for instance, what is this? Sasol or these fuel companies? Is it necessary or is it a must for auditors to have their own engineers so as to to get to understand how does Sasol generates the revenue, the material they're using to get into the final product? Because I understand because sometimes it is very difficult to get to know how did they get to the final product and what material did they use. Yeah, I think that's it from my side, because I mean, like, it's much more easy when you go to audit like companies which provide services like Absa Bank, the municipalities, the government departments, and so on and stuff like that. But it's very difficult when it comes to engineering, whereas we as auditors do not specialize in that specific area. Thank you, sir.
Thanks for the question, Siamkela. No, to answer your question, that is where the auditor needs to determine what the level of expertise would be required before taking on the client. So, for instance, your bigger auditing firms such as Ernst & Young and PricewaterhouseCoopers, KPMG, and all those places, they already have experts that became CAs that's working for them. So for some of those companies, they already have chemical engineers that also became CAs. However, that does not make them specialists on the ways that Sasol works. So that is why the ISAs allow us to make use of experts. If you go to, you can rely on the work done by experts. For instance, if I can use the example of a diamond company, a company that sells diamonds. I'm not a diamond valuator. So obviously, when it gets to the point where I need to evaluate or value the reasonableness of the stock on hand, I would make use of an expert's service. So that is the main thing there. And I think if you can read ISA 620, and that speaks to the use of work done of an expert, that the external auditor can rely on that work. But no, and if you mentioned banks, just remember some of those people that audit chemical engineering companies, as such as Sasol, won't be able to audit a bank. A bank's financial statements are financially much more intricate than that of Sasol. Because remember, Sasol's process might be more intricate in terms of the chemical engineering required, but their financial system might actually be very straightforward. I'm just giving an example here. Whereas a bank makes use of financial instruments that is extremely difficult to evaluate and to test. So the subject matter specialists are definitely allowed to be used by external auditors, and in fact, the ISA standards makes provision for it under ISA 620. Does that answer your question, Siamkela?
Yes, thank you very much, Mr. Charles.
Thank you, Siamkela. Guys, there's another 2 minutes if you have any questions. Timakazi.
Hi, Charles. I wanted to know, in the instance that you mentioned that financial services companies are required to have 2 auditors, and
Yes.
then in the period that they're audited by both auditors, what happens when, for instance, let's say the blue bank was audited by the orange firm, and the orange firm is not independent, and then the blue firm is also their auditor, and they both issue different audit opinions. What then happens when that happens?
Well, obviously then there will be an investigation as to why there's a difference in opinion. But in terms of before I get to that answer, in terms of the independence, is that independence needs to be established before the engagement is accepted. So if the bank is being audited by two different auditors, they are not audited at the same time. So the blue auditors and the orange auditors won't be at the bank at the same time to create a conflicting situation. Should they issue different opinions, that will immediately result in further investigation being conducted. That is the reason why they are doing two audits, is that more reliance can be placed on the reports of a bank if confirmed by two auditors.
Okay, thanks.
I hope I addressed your question.
Yes, thank you.
Any other questions, guys? Guys, if there's no further questions, then you guys must have a lovely evening. And then if you guys have done the attendance register and the evaluation and left your student number, then please enjoy the rest of the evening, and then I'll see you guys next week, same time. Have a good evening. If you guys don't have any other questions, you are free to exit the meeting. Thanks for all the questions, Siamkela. Appreciate it. Loop hy voor my kan. Hi Adele. Adele, kan jy my hoor?
Ek praat hier met myself.
Dit gebeur op 'n daaglikse basis met my. Dan voel dit vir my asof ek 'n baie goed geskrewe prosa stuk nou net verloor het, dan moet ek dit van voor af skryf.
Ja, praat. Ek dink dit was 'n lovely session vanaand.
Ja, nee, ek gaan dit definitief weer doen met die volgende sessies.
Ja. Ek het dit verskriklik geniet.
Ja, nee, ek dink hulle dit lekker. Ek het nie eens by die vraag uitgekom wat ek saam met hulle wou doen nie.
Dis okay.
Ja, nee, dit was lekker geweest en dit was bespreking geweest en ek dink alhoewel dit teorie was en sekere tutors dalk kan dink dis tutoring, ek het baie praktiese goed ingebring sodat hulle daai skill kan aanleer om dit uit die teks uit te vat en dit prakties te maak.
Ja. Sê gou vir my Charles, gaan jy môre se training bywoon van 4 tot 7, wil jy jou sessie kanselleer of jy voortgaan?
Adel, ek moet net kyk op my skedule. Ek werk nog tot 5 uur en ek het gewoonlik 'n management catch-up 4 tot 5.
Ek is seker daarvan as hulle 'n recording wees, so moenie stres daaroor nie. Dis eintlik die nuwe oudjies wat ek wil hê dit moet bywoon.
Okay, ek sal tyd dalk boek sê Saterdag. En dan sal ek daai recording kyk of ek en jy kan dalk 'n Teams ding hê as jy wil. As jy dink daar's goed dat ek en jy dalk nog nie bespreek het nie en jy is beskikbaar dalk Saterdag of een van die aande na klas as jy wil.
Okay.
Dis ek kon nog nie vir jou gesê het en ek probeer al die heel dag by jou uitkom om met jou te praat, maar dit was net eenmal dag. En ek weet ons het nou so 'n bietjie issues, ons skuif na 'n nuwe kantoor toe, so ek en die ander hoof, ons moet die hele tyd die goed bespreek en goed, en dan vat dit nogal van my tyd op en ons doen dit gewoonlik 4 tot 5.
Okay, not a problem. Ek gaan vir jou nou vanaand MIC se materiaal aanstuur. Ek sit nou daarmee.
Okay.
En dan kyk jy daar bietjie daarna en dan praat ons in die week nog weer daaroor.
100%.
Okay.
Is jy tevrede met my claim, Adel? Dat ek dit vir reg gedoen?
Ek is tevrede met jou claim. Ons gaan nou kyk wat sê vir John. John kan dit dalk sê. Ek het net 'n nota bygevoeg wat sê dat daai kyk ek kan nou sê 4 ure meetings is 'n bietjie over the top, maar ek het daarby gesê dat ons visual literacies beplan het. So en dit is waar. Ek meen ons het gepraat oor daai opnames wat jy moet maak. So
ja.
Justified it. So dis fine. Ons kyk.
Okay, 100%.
Okay.
Baie dankie Adel.
Okay, jy moet 'n lekker aand hê.
Baie dankie en jy ook en dan gesels ons weer môre.
Yes, ons doen.
Dankie Adel, hoor, lekker aand vir julle hoor.
Ook. Tata.
Bye bye.